came off the low price down here. We started to see a strong higher high, higher low phase, which helped to hold the price into that fair value at the top edge. And that allowed you to think about the market from a buyer's perspective only, because they're going to be adding liquidity underneath the marketplace. So when you see that change in the narrative, the NASDAQ went from 15,230 to 15,290, 60 points higher. It's pretty good upside. Pretty good upside trade right there. So when we understand that storyline, we're absolutely delighted to be able to take advantage of those big breaking markets. I don't know if anybody practiced it, if anybody traded with it for an hour or so after classes, but try it today if you haven't. If you're not doing anything else, if you're not in any trades, try and be the designated market maker for a day. Try and be the designated market maker for the day and see if you can do it, see if you can achieve it. Gold's been quite volatile. I hope you've been selling some gold top edges. It's not been too difficult. 86s was an absolute given. I don't know why it even got back to that price. It seemed as if there was maybe a lot of sellers getting trapped. There was a lot of sellers getting trapped into the trade, and then they were getting squeezed and trapped and squeezed until we eventually got the top edge again. But if you were, I mean, come on, guys, seriously? What the hell is even that? That's crazy, right? So a lot of sellers may be getting trapped because of how much value is in this short. And for that reason, it causes a lot of liquidity getting crunched at the top edge. And it's not been that difficult to lean at the top edge because the lean's dead obvious. The lean actually came in at 86s. Purely and utterly, the lean came in at 86s. Well, it is manipulation on this occasion because did you see the book? Did you see what happened on the book? That's all it ever was. Pure, utter manipulation of price. Here's the book here. Take a look at the book. So what they tried to do was they tried to generate a lot of buyers into that area, and it kind of worked. I mean, they got a lot of liquidity. I think when people sold into that phase there, I think they were expecting, because of the lack of buyers coming in through that phase, I think they were thinking that the price probably wouldn't come back up into that top edge. So they were selling into that ahead of that level, which is okay. So long as you get your stops in at break even and you're not the victim of the squeeze, of course. Well, we got the squeeze. You got the jam at the top edge. Everybody had an opportunity to sell against that price. Having seen the spoof coming in massively, which did bring a lot of buyers who all capitulated into the top edge. Every single one of those buyers is now jammed because the sellers were in trouble, right? The sellers got into a lot of trouble because of the size of that spike. It went 84s to 86s. It was 20 ticks, bigger than the usual gold spike. And then obviously that gave you a great chance to sell into that 86 print jam, selling 86s. And you got down to 79s, $700 of easy sell-side profits. You don't pick up on the easy stuff, guys. You're not going to pick up on hard stuff. You've got to pick up on these easy trades, right? You've got to have these easy trades. There's no ifs or buts. There's no excuses. This is an absolute given. You're not going to get anything else that looks like this in terms of value. Well, that's the liquidity bar right here, Paul. What else is it? The highest volume, almost the highest volume of the day as well. So when we talk about the highest volume of the day, the two highest volume candles of the day was a sell-off coming off the top edge. But prior to that, the highest volume was that up candle. The highest volume of the day prior to that was the up candle into the top edge. And then this up candle into the top edge, one of the highest volume candles of the day again. Incredibly easy to use any system, any process to get short. And a day's, possibly a week's worth of money on gold shorts off of those top edges. Because that 86 traded 78s. $800 That 86 traded 79s. $700, that's a $1,500 rotation off the top edge in the last couple of hours. It's been absolutely fantastic for any gold traders. Best market by a mile just now. Certainly, the Sleepy Joe of the markets having a few problems, obviously, on bonds. But we're getting there, slowly but surely. Not as exciting as gold, but we're definitely making the progress that we wanted. We came off 190, 120, 23s. We got up to high price of 60s. It's an all right trade. It's an all right trade. We've done okay, guys. We've done okay. Cash open in 4. You'll see from an hour ago we targeted the 82 handle, guys. Does anybody see where oil prices got to? We cleared the 82. We got down to the 82 on the US oil market. And obviously the December contract got down as low as 81.30. Oh yes, $1,400. $1,400, guys. And that's sell side oil from a tweet we sent out live in the room. And I called everybody out on the fact that at the time we'd 1 like. And I was like, what the hell? Everybody should be in this. This looks like a great looking trade. And we explained why it was a great trade. And obviously we were talking about China buying the markets in yesterday's close, selling the Brent oil markets today into the Brent move higher. And we said that they would be rotating out of that Brent into WTI at higher prices to balance out their books. Pretty volatile stuff, guys, coming into the cash open here. Here we go. Let's see what the dealer's side looks like this morning. You get an early diddles read on to your dealer side of the book. You make your decisions, you try and get involved, you try and get a handle on it. Dealers were selling at the cash open, obviously, as you can see. If you're using your dealer's narrative, you should have your fair value levels. Fair value levels on the Nasdaq is a minus 14.2. Just watching bonds again on this downtick again here, guys. Overall shape of this, I would still be willing to bid the lower prices into these downticking phases. So quite happy to still buy into this for the time being, certainly. And we've managed to pick up some business there at 29.30 on the ultras. It's just popped back up to 192s. And not, yeah, we might, well, no, I'm going to just take a stop at break even, I think, at this stage, rather than trying to take some money off at 192s. I'll just put a stop in here just now on the buy side. So quite happy with the bullish bond still for the time being off of the cash open here at the moment. This is what we're seeing in terms of the 5s/10s predictor. We can see that there is a value divergence to sell the belly here. That was the last big buy trade we had here, but there's still value divergence to sell the belly still into this uptick. So I still want to be long bonds into the downtick. And that's what I've just done. I've bought some bonds into the 29.30. And as I said, we got up to 192, sorry, zeros. And we're obviously just sitting here just now waiting for the next piece of information, basically. Yeah. Anybody on board? Anybody doing any business on this at the moment? Anybody liking it? Anybody thinking to themselves, you know what? Yeah, I'll take a piece of that. So we took a scratch on that, and we're looking to buy back in again. There's a bit of selling coming in, so I'm just watching for that opportunity to buy back in at lower prices again. So that trade was we got to a positive of +3, and then we scratched out. We never took any profits at all on that, so that was a break-even trade. And I'll be looking to buy back in again on the way down here, unless the narrative changes. But at the moment, quite happy with the narrative, quite happy to buy back in, and we'll see how it goes. How are you guys doing with your short gold? Still holding? Damn right, you're still holding, right? So obviously, if you're short gold and you're buying bonds, that's a nice blue line spread you've got there. You're starting to buy into that as a blue line spread opportunity. So that's a good play for anybody that's on the gold, because obviously you can start taking some of that gold short, which still looks in line with what's happening here very strongly. And you're obviously looking at that going, yeah, baby, that's a good one. A wee bit of profit because of the dollar reversal at the bottom edge here. So a nice place to take a bit of cash into here. And obviously that's at the same time as you are buying some bonds, of course. So where is the next sellable opportunity? Well, assuming the real yields stay very bullish, then I would like to think the next sell opportunity would be another pullback into 81.5 and 82s. 81.5, 82s. Let's see what Max is doing in terms of liquidity. Max is sold. As far as liquidity, remember, liquidity is a different thing, guys. It's not a trigger. It's an indicator of liquidity being added on the offer, right? So this is liquidity being added on an offer. So your job is to try and find sell orders to lean against. Sell orders to lean against. They can be quite a distance up from here. So you start looking for that area to start leaning against the short, and you can see that Max got short just after the cash open, and obviously punched the price right off of that price level at 33, 34s, all the way down to 04s for 30 points. That's a $600 winner off of Max liquidity. $600 winner off Max liquidity. Do you want me to leave this up just now, or will I just put it away? I can leave it up. Remember, this isn't a buy trigger or a sell trigger. It's a liquidity trigger. It doesn't mean Max is selling this price. It means Max is adding in offers at higher prices. So we start looking for those offers. We start trying to find where Max is busy when we see those offers appearing. And obviously when Max starts adding in, you can see Max is flashing up some blue bids here, but they're not sticking around for any period of time. So when Max flashes up a blue bid here, it's just a flash bid coming in and they're pulling away. So they're adding and pulling, adding and pulling, adding and pulling. And you can see what just happened there, big pop to the upside, see it? So you saw that Max was not selling it. They certainly weren't adding any sell side liquidity. They were punching in some buy side liquidity into that bottom edge, and you can see that resulted in a very, very nice upside. So it didn't stick around, but obviously that's because of the time frame. It's because of the time frame. They're adding liquidity and punching the price and then pulling, adding liquidity, but they're not sticking around with the liquidity. So we can start watching that area when we see it flashing on and off. We can start watching that area for that liquidity grabber right into the bottom edges, and you can see it went straight up. It's a cracker, isn't it? Absolute cracker. But you can't see that because obviously it didn't stick around, but hopefully a few of you saw the liquidity being added. There's a liquidity being added on the short side. Do you see that? Now that was on a downtick, so that's obviously a little bit harder to try and see that because obviously that liquidity came in there on a downtick. So it's obviously only going to be relevant and valid if it's on an uptick into a good price that you can then put into your charts. You can see they're not adding any offers at these higher prices. So you can see that liquidity, obviously a very, very short-term thing, but it's not sticking around in here. So you just let the price carry on through. Adding some liquidity now, so if it sticks around, let's see what happens. Nope, it's not sticking around just yet. It's not sticking around. So they're just adding some liquidity, pulling it away, and seeing what happens. If it sticks around, that's the liquidity starting to build. So you can see that buy trade off the bottom edge. It's just a pity it never stuck around long enough that we could have put a line on that chart there. Adding a bit of liquidity a couple of times here now successively. Just not sticking around, and they keep pulling it away, keep pulling it away, keep pulling it away, and then we'll see if it sticks around anytime soon. We can leave a sell arrow in place if it sticks into that area. So they keep on adding offers at the moment. The Max keeps on adding offers and pulling them away, and the price just keeps on going higher from that at that stage. See what happens? They're adding offers and pulling it away, letting the price carry on through, adding offers and letting it pull away, let the price pull through, but they're not sticking around for that liquidity at this point. Okay, so they're starting to add some offers there, but they added it right at the very end of that. Now, I don't know where that liquidity is, so I'm going to start hunting for that liquidity to get into that as a bit of short business. So this becomes like a buzzy area. You know this becomes a buzzy area because that liquidity has now been added. So this becomes an area that I want to start watching for opportunities. I want to start seeing that liquidity jamming price so that I can take advantage ultimately of a sell-off in that area. See what happened there? They flashed a little buyer into place, but they never stuck it around. So they're selling off the top edge. You can see Max has stuck that price and a reasonable little drop there. We've went from a high price there of 53.5 down to a low price of 46.5. That's a pretty good sell. It's a pretty good sell just there. Pretty good trade.